Analysts at Citi have predicted that the profitability of Kenyan banks could drop by double digits next year, weighed down by the fall in lending rates and higher costs of mobilizing deposits. Joining us now for this discussion from Nairobi, Kenya, is George Bodo. He's head of research at EcoBank. George, thanks for your time. We speak about this story because a few weeks ago, in fact, I think it's about last week, we saw a report suggesting that profitability in the first 10 months of the year had equaled profitability of 2011. And yet, the analysts at Citi are suggesting that we are unlikely to see this trend continue. Is that something that you agree with?
Well, I have a dissenting voice to that. You know, the kind of benchmarks we look at, we don't anticipate that kind of a drop in the profitability in the sector. This is because one is we actually see a very dovish central bank in the first half of 2013, and if you look at the credit statistics, it actually points to the fact that they need to get more dovish in the first half of 2013. And let me just give you a sneak preview of what we're looking at here.
Yeah.
We're looking at quarter 3 2012 credit numbers, where the private sector credit growth on a quarter-on-quarter basis actually just grew by a mere 1.7% on a quarter-on-quarter basis against the central bank's target of 4%. So it shows that there's still more room for the central bank to get more dovish and kickstart lending, you know, by lowering the rates.
Yeah. And
then additionally, on a year-on-year basis, quarter 3 credit, actually private sector credit grew by 7% against an annual target of 16%. So you can see that there's still substantial headroom for the central bank to lower these rates even to single-digit territory.
Yeah.
Now, our analysis over the past decade have shown that there is a direct and a positive correlation between low interest rates and increased lending.
Yeah.
So we are seeing a situation where at a single-digit territory, interest rates, the lending will actually go up substantially. And so the issue of bottom line going down by double digits, we don't see it actually.
So what's your call? Are you saying actually we're likely to see banking profitability increasing on the back of increased lending?
Yeah, we actually, on that basis, that there's a positive correlation between lending and low interest rates. We actually see we actually see an increased growth. And just to actually emphasize on that there was an argument that the spread, the lending and deposit spread will actually narrow. We actually don't see it because if you look at the pricing in the market at the moment, the pricing actually it's on a credit risk and cost of fund basis, and we're actually seeing cost of funds hovering below 2% in the first half of next year. So we don't see the narrowing of the spreads, and the spreads will actually remain very healthy both in the first half of 2013 and the second half of 2014.
Okay, so what's your forecast actually for profitability growth for the banking sector for 2013?
Our focus is we actually look at two things. One is the deepening of the core interest income in 2013, and just to there was a problem. Obviously, we all allude to the fact that the spreads have come under pressure in the whole of 2012. This is because when you go back to quarter 4 and quarter 3 2011, there was a liquidity squeeze, actually, a very acute liquidity squeeze. The money markets were tight. The interbank lending was about 30%, but that situation has gone down, and we don't see a replication of that situation in the next coming few months.
Okay, so what's your focus?
We actually see very healthy spreads in the. Our focus our focus now is how much upsides can be derived from these new mobile innovations. How much upsides do we see that it's going to bring in the non-core, the non-interest income basket for the banks? And we actually see some substantial upside because Kenya is a very unique market. The banking terrain in Kenya is quite getting more unique. A lot of mobile innovations, a lot of non-transactional driven income from the mobile platform. So we're actually seeing a lot of upside to compensate for any decline in lending, if there will be any.
Do you think we're likely to see an increase in the teens?
I beg your pardon, just take that again.
In terms of overall profitability for the banking sector, you reckon the increase could be above 10% or somewhere in the teens?
Yeah, we actually project about 20%
about 20%.
growth
Okay.
To 20% growth in interest income. Although 2012 on a year basis, it will actually go down by 14%.
Okay.
We project for 2012 full year,
okay.
we project a 23% growth versus last year 37% growth.
Okay, so let's talk about your forecast then for the interest rate environment. You have talked about the fact that the central bank is likely to be more dovish, suggesting, of course, that you're seeing rates lower in Kenya than where they are at the moment. What's that range that you focus in terms of what needs to be taken out between now and next year?
We actually think that we actually obviously think that the rates need to be below in a single-digit territory, that's below 10%, and we actually this is underpinned by the fact that World Bank itself recently called for a more easing environment because if you link all these things, a direct correlation between the output of the economy and credit lending to the private sector. So if you have a tightened credit environment, obviously you're going to see a declining output and a declining demand. So that is quite negative for the economy. So we think that to jumpstart the economy, the central bank is going to get more dovish, especially in their next month's meeting. We're going to see some kind of some cut on the CBR, and it's basically a signaling environment that hey, we are on an easing environment, so we want to jumpstart the economy. Although the quantum of that cut will likely be affected by the performance of the Kenya shilling, because they also have a Kenya shilling to look at, and this is informed by the inflation environment. So, but we actually generally see, on a net basis, we see a dovish central bank. We see a central bank jump-starting the credit economy. We see a very robust credit growth in the first half of 2013. Sorry.
Okay, George Bodo, Head of Banking Research at EcoBank, thank you very much indeed, suggesting that volume is going to help mitigate for the loss of margin at Kenyan banks.